people blame the Cheltenham and Gloucester Building Society for their mounting debts. But the Cheltenham and Gloucester didn't want to know.
We put everything we could into buying our home.
I blame the Cheltenham and Gloucester.
It's a human tragedy of monumental proportions.
Tonight, the Cook Report, the C&G, and fair play. This is Cheltenham. And this is Gloucester, twin cities straddling the M5. To many, the heart of England, solid, dependable. And this is the headquarters of the company which has traded on those names for 141 years, the Cheltenham and Gloucester Building Society. But today, they're in trouble with clients.
I think Cheltenham and Gloucester should accept their responsibilities now and just wipe these debts off, give us back our deeds, and everybody will be back where they started before this dreadful scheme started.
It's 10 o'clock this morning, and these borrowers from and protesters against the C&G are on their way to the Society's annual general meeting. Each took out a mortgage on their home, some on the Society's advice, and invested the money in a scheme promoted by the C&G and apparently backed by them with £100 million, which was supposed to pay the mortgage and provide either an income or a lump sum. But the scheme collapsed.
They can't stop us. We're unstoppable now. We've got the bit between our teeth and we're raring to go.
Paddy Carroll from Tunbridge Wells says the C&G has cost him £27,000.
I personally blame the Cheltenham and Gloucester because I entered through their scheme. They gave it absolute credibility from the word go. When I checked it out with them, I was firmly convinced that no organisation of that stature would provide that sort of capital without actually going thoroughly into it, and they gave it total and utter credibility, and that is what sold it to me.
Were you warned, though, that you could lose your house if things went wrong?
Absolutely not. Absolutely not. If someone had even blinked at me, either the C&G, Fimbra, or the representative of Aylesbury, that was a risk, I would not have entered it at all.
This was the scheme, run by a small Kent company called Aylesbury Associates.
Would anyone be interested, particularly pensioners like myself, who are victims, to parade in Bromley High Street with placards?
Right.
An action committee meeting in February. There are 230 victims in all, owing millions between them. They've been campaigning for a year now. There were many home income schemes in the days of high house prices, but this was potentially the big one. After all, C&G told clients they'd agreed to back it with up to £100 million.
Have a show of hands on people who would be prepared to get on a coach with a crate of Guinness, or whatever you do, and go to the annual general meeting.
The investment growth Aylesbury offered these people was wildly optimistic. There was no growth. In fact, millions of pounds were wiped off the value of clients' investments. But long before they knew there was a problem, C&G had cut loose from Aylesbury and had flashed this confidential message to all branches. Do not introduce any more customers, and all special literature about Aylesbury should be destroyed. C&G would rather these posters were destroyed too. Their solicitors warned us they were defamatory. But so far, C&G have refused to pay up, relying on the chief executive's statement 5 months ago that they bore no responsibility.
Well, I think first of all it's important to make it clear that C&G had no contractual or formal business arrangement with Aylesbury Associates.
Disgruntled clients are not the only ones who think C&G are passing the buck. Aylesbury's founder rejects the society's claim that there was no formal arrangement between them.
Got to be rubbish. There was most definitely a formal working relationship. Whether it was a contract is for other people to decide.
Westerham in Kent, where John Dewar has kept his home. Despite the collapse, he didn't go bankrupt himself, and he only reluctantly accepts some responsibility. He first did big business with C&G in a pilot scheme into which he says they put £9 million.
This had to have board approval. The result was the scheme in itself got transferred to their direct lending side at head office. I was invited to attend a very senior executive meeting. At this meeting, we obviously have our 8 to 10 million and the scheme's on the road. We have brochures printed. We have mortgage application forms printed. They suddenly say to me, can you handle 30 million?
As the relationship developed, C&G allocated not 30 million, but £100 million. Marilyn Charvet worked for Aylesbury and now works for the industry's watchdog, Fimbra. She's no doubt that the relationship between Aylesbury and C&G was a close one.
It felt like an in-house scheme because we were processing mortgage applications using C&G stationery, using their forms for submission, using their staff valuers for valuation, collating the reports and the references and submitting them as a package to the Building Society.
Pay up, C&G! Pay up, C&G! Pay up, C&G! Pay up!
Down with C&G!
The protesters tried to see the C&G manager at Bromley in Kent.
Good morning. May we speak to the manager, please?
I'm the regional manager. Can I help you?
Yes, please. Could we talk to you about the home income plans that this building society sponsored?
We can make no comment at the branch level, so we have to go through to our public relations.
Would you be prepared to come out onto the pavement and talk to the investors and the borrowers for them?
No, I'm afraid I can't do that.
You're not prepared to talk to us at
The
all?
Aylesbury scheme, first promoted here, appealed particularly to the elderly, those with a modest income but a valuable asset in bricks and mortar.
Make any comment.
But my mortgage was arranged through this branch. I mean, you loaned me and pensioners 70% of the value of their homes, against, with no prospect of repayment from their income. This branch sponsored it. This branch actually signed and endorsed the forms. And we'd like to talk to someone about why they did that and why they're not prepared now to live up to their responsibility and cancel
The C&G also had a scheme to help pensioners raise money on their homes. But for their own scheme, they had a prudent limit, no more than 25% of the value of their home. But when they recommended Aylesbury Associates, the C&G were prepared to advance up to 70% to the same kind of people. Mary Murray believes the C&G has cost her £48,000.
The Cheltenham and Gloucester say I still owe them money, and the interest is still going up. And with my pensions, it's just impossible. I could never repay. I think it's just ridiculous. It should be stopped.
The son-in-law arrives to comfort Mrs. Murray. Since the death of her husband, she worries constantly about keeping a roof over her head.
Hi, Mary. We got involved in the scheme through a visit to the Cheltenham and Gloucester Building Society in Winchester when I went in to ask about their 60-plus scheme to help my mother and father-in-law to raise money on their house. We spent some time with the manager who actually recommended a scheme they had set up with Aylesbury Associates. They gave us the papers, and that was fine. It looked good. Recommendation by Cheltenham and Gloucester, and that's how we came to be associated with them.
Mrs. Murray and her late husband wanted to borrow just enough money to buy a new car. But as with many others, Aylesbury persuaded her to take much, much more on the promise of income from investments.
I was getting a bit confused with all this, actually. And time we really got the papers back, it was 87,000, which I just couldn't understand.
The effect of my father-in-law was dramatic. In fact, if you look back at the dates, I think that the Aylesbury Associates problem really came public in July, and it was within 6 weeks that Mr. Murray died, and I don't think that's a coincidence.
The regional manager declined to allow the manager of the shop who arranged my mortgage to talk to me, but he gave me your number.
Paddy Carroll speaks to Jill Culver, C&G's public relations officer, who'd previously told us that as far as they were concerned, investment firms could be trading in bags of potatoes.
Now, I don't see how you can then duck the whole issue and say you're not responsible.
C&G, she added, were only interested in selling mortgages. Paddy has no more luck. 6 weeks ago, we sought an interview with C&G's chief executive, an invitation he declined, saying Aylesbury Associates used our name in ways which were not authorised. This was the statement which persuaded Aylesbury's John Dewar to talk in his solicitor's office. He admits that he got his growth forecasts wrong, but feels the C&G are trying to put all the blame for the collapse on him, saying, for example, that he'd used the C&G's name in ways which were not authorised.
I would like them to spell out where we use it in an unauthorised fashion, and if we had been using it in an unauthorised fashion since 1989, they would have at least written to me as the senior partner in the strongest possible terms.
Any other examples of how close you got to C&G?
Yes, I think you're going to be interested to see the mortgage application of which they had printed. It clearly shows their branch reference number. It's in user-friendly green, equity release, Cheltenham and Gloucester Building Society.
And they printed those?
They printed these. Now, no head office or board of directors can say they were not aware of that happening through half of England and probably in excess of 50% of their branches.
Everybody on this coach is wondering just how they'll get on at the annual general meeting. To a man or a woman, they concede that Aylesbury was the instrument of their downfall, but insist that C&G was the cause. In a way, Finborough, the finance industry watchdog, agrees, saying that C&G should have ascertained for themselves whether or not the Aylesbury scheme was viable. They also say there was undoubtedly some irresponsible lending. We've also discovered, for example, that one C&G representative actually distributed Aylesbury literature to double glazing outlets. And we've also discovered that these mortgages, unlike yours or mine, didn't involve the lender asking the borrower whether or not he could repay it. Derek Woodward from Worcester says the C&G has cost him £33,000. He's had several heart bypass operations and lives on his disability pension. When he asked C&G for a small mortgage to repay a debt, they turned him down. 2 months later, they lent him £51,000 through Aylesbury.
I saw this advert in the paper, the local evening paper for Aylesbury Associates. Saw that it was backed by the Cheltenham and Gloucester, which I thought is pretty good because we've been with them, Cheltenham and Gloucester, since 1962. So I went to see the people at the Cheltenham and Gloucester, asked them about the scheme, is it any good? And they replied, yes, it is good. Otherwise, we wouldn't be putting £100 million of our cash into it. You know, I'd like to know that when I do die, and the specialist has told me it could be at any time, that when I do die, that my wife has got a house to live in. And I think the Cheltenham and Gloucester should assure me that she will have a house to live in. Because I blame the Cheltenham and Gloucester. They've got me into this mess, and I want them to assure me that my wife will have a house to live in when I die.
Paul Stafford is one of the lawyers coordinating possible legal action against the C&G, a claim for money clients have lost and compensation for their suffering.
I don't think the C&G investigated a person's ability to repay the mortgage properly. For example, in Mr. Woodward's case, he went into the local branch of the Cheltenham and Gloucester Building Society here in Worcester, and he was turned down for his loan because he was only on DSS benefits. He subsequently approached Aylesbury Associates and obtained a loan through the Cheltenham and Gloucester Building Society. That must be a nonsense.
To be fair to C&G, they haven't tried to evict any elderly victims, but they haven't stopped rolling up the interest either. Worse, victims weren't told for almost a year that Aylesbury had stopped making their mortgage repayments.
I had no warning that the repayments weren't being met. No warning at all. I had no idea that things were in the state they were. I was absolutely devastated.
The actual mortgages have been rolling up at a rate which is extreme. And that could have been stopped by a simple decision within the Building Society, which at least would have put the status quo on. They have refused to do that.
I found that the original 73,500 had gone up to 87,500 pounds, and my monthly repayments, I was expected to pay £918 a month, which I couldn't possibly pay.
Last Saturday morning, as the date for the AGM and for this programme loomed, a letter arrived at the homes of all the victims. It was from C&G. It appeared to offer hope that they might be returned to the position they were once in. Our written request for an interview declined. We called at the home of Andrew Longhurst, the chief executive, to ask him to elaborate on the letter. Vera Hawkins, as organiser of an action group, was assessing reaction to the letter on the phone.
Yes?
Well, we know Mr. Longhurst is in there. He's in the room just by the, or was in the room just to the left of the front door, but he's not responding.
I will come back to you and we'll go into detail.
The general response from fellow victims seemed to be that the letter was highly ambiguous and promised nothing definite. Back in Cheltenham, Mr. Longhurst eventually appeared to offer answers, but not on the spot.
What I would like to do is offer to you the opportunity of an interview in my office, now that we have got something positive to tell you.
For an independent view on whether Aylesbury's promised high rates of return were realistic and whether the C&G should have known what they were backing, we went to John McCurdy of Noble Lowndes.
There is an apparent contradiction with Cheltenham and Gloucester. I find it hard to believe that anyone in the financial sector who saw the projected rates of return for repaying the mortgage or meeting the interest payments would have accepted that this was possible. At the same time, the Cheltenham and Gloucester did make 100 million available to them, and if they did that without being aware of the sales methods and illustrations that were being given to the clients, then I think that they do have questions to answer.
So they hadn't checked that the scheme couldn't work while still apparently backing it to the tune of £100 million. Isn't that, to put it bluntly, either irresponsible or incompetent?
I would prefer to say naive or incompetent.
The 11th hour letter from C&G isn't quite what it seems. Stating the aim was to return victims to their previous financial position, the C&G said they would assist in this if found liable through the Investors' Compensation Scheme. But the ICS deals with investment companies, not with building societies, and the ICS told us yesterday they couldn't guarantee to fulfill C&G's offer in every case. Anyway, what they could do would take time.
Well, of course, you have this information and I don't. Our understanding from the ICS was that in the majority of cases there would be sufficient funds available. We also understood from them that they were putting a dedicated team onto this to avoid delay. And from our point of view, the great advantage of this scheme and the reason why we went for it was that it was going to solve people's problems very much more rapidly. And could I say that if there is a small shortfall because of interest which prevents an individual account being paid off, then we would certainly look at that sympathetically and be prepared to pay a certain amount of money ourselves just to solve that individual borrower's very concerning problems.
But that's not a yes or a no. It's not absolute. If there is a shortfall, will you meet it?
It depends on the circumstances.
But it's not a quick fix. This will go on for some time. And investors are wondering why, if you were as concerned as you say you are, the interest kept on rolling up. Why couldn't you have put a stop to that?
Well, the interest has been rolling up, but of course we haven't been asking people to pay that interest.
It's still a debt.
It is still a debt, and the bonds have continued in existence, and interest has continued to be earned on the bonds as well.
What was left of them?
Well, we have no knowledge of that because we have been kept from any knowledge about how the bonds are performing.
FINBRA, the industry watchdog, say there was undoubtedly irresponsible lending in this and other schemes, and that building societies, the C&G, should have checked for themselves to see that any of these schemes was viable. He didn't do that.
Well, as Mandy Rice-Davies said, they would say that, wouldn't they? It's quite clear that FINBRA was at fault. FINBRA was the regulatory authority which had the responsibility for the public at large, to protect the public at large and building societies and lenders like C&G, and to assure them that FINBRA registered firms like Aylesbury Associates with the highest level of FINBRA recommendation were actually sound and secure.
FINBRA say their remit is to check the personnel, as it were, and not the product, and that you should have checked what it was that you were getting tied up with Aylesbury.
Well, that can't be so, because under the Financial Services Act we are not allowed to give investment advice, and we're not allowed to interfere in the investment advice which is given by a firm of independent financial advisors.
But this was a
What
scheme.
we saw was from Aylesbury Associates examples of how their schemes might operate.
So you bought a pig in a poke, basically.
Well, we didn't buy a pig in a poke. The customer of Aylesbury Associates saw an opportunity, in a sense, to get something for nothing.
The people he says wanted something for nothing arrive at the AGM. These people realise that whatever the chief executive has to say, the society's offer won't solve all their problems. All the people we spoke to said, once again, that the C&G's name was what really made it copper-bottomed, one of them said to us, for them. Some of them actually sought advice from branches and were pointed to Aylesbury. One gentleman rang head office here and spoke to a very senior man who said, yes, it's a good scheme, otherwise we wouldn't have put £100 million behind it. The same sort of comments were made at branch level to other people we spoke to. £100 million seemed like a lot of backing.
This £100 million comment is not one which I have previously heard emanating from us.
At branch level, people were being told there was £100 million behind it. A very senior person here told a borrower, and Mr. Longhurst, you told Central Television on the 3rd of December 1991, if you look at the underlined part, that there was £100 million
available. Yes.
So it did emanate from you.
Well, £100 million available doesn't mean to say that we are backing the scheme with £100 million.
How many angels can dance on the head of a pin? If you're actually saying £100 million is available, that gives the scheme credibility. People say, well, if somebody as good as the C&G, and nobody denies you're a good and well-established building society, actually says, yes, we've got this available, that's backing.
Do you mind if I just read the background? You've highlighted one phrase.
How many branches were involved in the promotion of the scheme by having the brochures available or having them on display?
Investigations show after the event that of the 176 branches which we had at the time, some 27, I believe it was, had leaflets in the branches.
Because during that interview you said that only 2 or 3 branches were involved.
Yes, I've explained that we have made more detailed investigations since then.
So you didn't really know what was going on at the time?
The difficulty is that with a large organisation of some 3,000 people, the chief executive can't know what is happening in every branch all of the time.
But he is responsible. That's where the buck stops.
Quite so. And this is why I've made it quite clear that we're not going to be dodging the issue in any way at all. And what we're going to be doing is accepting our responsibilities if they can be fairly laid at our door by the independent investors' complaint scheme. And I think that the scheme here is one which will solve people's problems. It will put them back in the position they were in before they got involved with Aylesbury Associates. And I see the scheme as a very positive step forward, not only for C&G and for C&G borrowers concerned with Aylesbury Associates, but also for all lenders and all other people who've been suffering as a result of these schemes from independent financial intermediaries.
But once again,
that's enough. Thank you very much.
We're unable to use some of the answers Mr. Longhurst gave. On the other hand, he didn't give us the opportunity to ask some of the questions that Aylesbury victims would like asked. And inside the heated meeting, the AGM, which is still going on, they're still not getting the answers they want. They're still faced with carrying a millstone of debt around their neck for some months to come, and they think it's time C&G played fair.